Thanks for being here. We've got a great panel today on commercial paper. I'm just going to do a quick introduction here. To my left, I've got Dr. Arthur Krebbers, Managing Director, Sustainable Finance Advisory at NatWest Commercial and Institutional Bank and Visiting Professor of Finance at Strathclyde University. To his left, we have Scott Creed, Managing Director, Head of Prudential Liquidity Management at Lloyds. To Scott's left, we have Peter Pears, Partner at Brown International LLP. And at the end, we have Benoît Usciati, who is Head of the Short and Medium-Term Securities Division at the Banque de France. So thanks for being here. I work on commercial paper at ICMA. We have a commercial paper and certificates of deposit committees, which is one that I run. And we have recently been focusing on looking at the CP market and measures to scale it up by reference to the much larger US market. So I've got a bit of data here, just to put this into context on the European market as compared to the US, and also just noting that, the data quality sometimes is a little bit poor, a bit suboptimal. There are a lot of measures out there which are aiming to increase transparency, such as through Bloomberg and CMD portal and others, but the data for commercial paper is slightly disparate, so not fantastic. But what we do know is that at the end of Q1 2026, the US CP market was worth $1.4 trillion. At the same time, the end of Q1 2026, the ECP market, which actually excludes the new CP market and domestic markets, was worth 760 billion euros. And actually, interestingly, 40% of that was in euros and 47% of that was in dollars. And the new CP market, which we're going to talk about later, was worth 298 billion euros. So you can see then, as compared to the US market, there's quite a big difference in the scale. We did a bit of a study last year in November, looking at the different, the differences, and wondering what we could do to try and bridge that gap or narrow that gap. As you probably all know, the European market is actually a number of different markets, which results in quite a bit of fragmentation, really. And of course, when you've got different markets, you've got different legal systems, regulatory frameworks, governing laws, different conventions and rules, different participants and settlement systems. But when you look at the US CP market, it's a lot more robust, it's a lot more liquid, it's a lot more deep. It's existed for many, many years. And they have got, one single currency, one single settlement system, one governing law, one set of conventions, faster settlement frameworks, a united regulatory regime, and more standardized credit ratings. So it's not surprising that their market, as with the capital markets generally, is much bigger. So thinking then back to the title of the panel about scaling up the European CP market. Now, I'm going to turn to Scott here as the issuer on the panel and ask you from an issuer point of view, and financial institutions are by far the largest of the issuing population for CP. What can you describe to us, Scott, CP's importance to you and its appeal as a funding tool? So why do you use it? Why do you use it as against other short-term funding tools?
Yeah, thanks, Katie. Great to be here this afternoon. So we and many others within financials, supras, corporates use CP as a funding tool to diversify our funding base with a number of other sources across the bank. And traditionally, if we're talking back to pre-GFC, it was a very, very short-dated funding tool. And it has evolved over time to be both a structural funding tool for banks in slightly longer tenors, but also that flexibility in the bank's balance sheet to manage short-term requirements, whether that be changes in asset mix or deposit flows, and to really be able to scale up and scale down volumes to manage banks and as I say, corporates and supras liquidity positions. Now, the role of short-term funding tools and that long-term funding tools is probably evolving as central bank facilities are wound down post-COVID. If you look in the UK, we've gone from about 5 different iterations of central bank funding tools, from the early stage SLS into FLS, TFS, and then into TFSME. We're now moving towards the end of those, and CP, as per those other funding tools that the bank has the ability to use, is a good supplement to be able to look forward to funding asset growth as we look to drive economic growth in the various jurisdictions. So it provides that flexibility to manage the balance sheet, but also some structural funding requirements as well.
So it's important to you that you have a very deep liquid market, that it's easily accessible. But do you think that it needs to necessarily increase, or is it working well for you at the moment?
I think it does work well, but as you say, and I work with you on as co-chair of the CP committee, it does need to evolve in many ways. I think there's a standardisation point, there's a transparency and data angle. There's increased digitisation that we'd like to see, and I'm sure we'll come on to some of these later in the panel. There's a product evolution that is taking place and probably needs to go further to become a more important tool. And there's definitely a secondary market liquidity angle. Still, when you do move into stress events, that there is a dry up of liquidity in the secondary market. And we need to evolve that both in BAU and in stress events.
So just looking then again back at the US CP market, and Peter, I'm going to come to you on this. In the US, the asset-backed CP market pretty well dwarfs that of Europe. And again, I've got some interesting stats. So the end of Q1 2026, of the total of US CP, 36% was asset-backed. In the ECP market, 12% was asset-backed. And in the new CP market, 2.5% was asset-backed. Now, when we talk about asset-backed CP, sometimes I think there's a bit of a misnomer because there are some structural fluctuations and differences in the type of assets that are being, supporting the CP. So can you explain to us what the different types of ABCP are, their structural factors in the various guises, and why it is so successful in the US? I mean, obviously the size of the market is, it's like for like, but why is it so successful over there?
Thank you. So, I mean, one of the very basic reasons is that the market's been around for a long time. So the first conduits were established back in the 1980s. So, it's been around for 40 years as a funding tool. You sort of hit on the point there that when people talk about ABCP, they're actually talking about a number of different types of conduits. People call these programs conduits. So you have this kind of classic bank-sponsored multi-seller conduits where banks are issuing, or their conduit is issuing CP and financing the receivables of their corporate customers. So that's what we sort of classically think of as ABCP. There are what we call CCP or repo programs where their financial institutions are funding their securities or loan portfolios. And then importantly, the third type, or rather a distinct type, is that there are independent sponsor conduits. So these are not banks, these are aggregators that issue CP and fulfill those two other functions. So they might be issuing that kind of classic asset-backed commercial paper, or they might be doing something more like a repo conduit. And in the States, those conduits are really big. So the biggest conduit is an independent sponsor conduit, and of the top 10 in the States, 4 independent sponsor conduits. So that's one of the really big reasons.
Okay, and so just sticking with that for a moment, like, why is this not taken off? I mean, I think it is starting to happen in Europe, right? But what is it going to take for this really to take off and become really big?
I mean, there are conduits, like independent sponsor conduits in Europe, so 2 or 3. In some ways, there's not a good reason for it. I think it's just taking time to migrate over. We know of a number that are looking to come to market. I'm a lawyer, so I've got to talk about the legal documentation and the actual documentary lift of taking what would be a USCP conduit and then adding the capability to issue European commercial paper is not that big. So there's certainly a lot of possibility to do it.
Do you think there's a lot of just a lack of awareness around these types of structures?
There's a bit of a lack of awareness. Yeah, I think so. You know, as I explained, there's a number of different types. You know, it's been said to me anecdotally that there's a bit of reluctance or hesitance in the sector because of, you know, if you look at a graph of outstandings over time, post-2008, there was a massive drop-off in conduit issuances, and in conduit issuances there we're talking about things like structured investment vehicles, which are very different from the type of things that we're talking about now. So I think, you know, to some extent in the market there's a bit of even the word suspicion about it, but you know, really the conduits that we're talking about now are very different from those.
Right. So they're kind of polluted by the hangover from the GFC, which was sort of around the securitization
Feels like a long time ago, but yeah, to
and,
some extent, I think.
Yeah. So it's maybe a bit of awareness around the fact that it's a different animal and it's, you know, it's completely separate to a securitization. Not that securitization should be polluted by the GFC either, but
and the conduits are very different. So, you know, obviously the regulatory environment is very different. With, you know, the sort of classic ABCP typically qualifies as a securitization, but that's very different. You know, the newer conduits, if you can call them that, have got, you know, more in the way of liquidity support, credit guarantees, etc. from those.
Yeah. Arthur, just turning to you. So in October 2024, ICMA released some guidelines on the role of commercial paper in the sustainable finance market. We released guidelines for use of proceeds commercial paper, and we set out some observations on sustainability-linked commercial paper. And you were very close to that process as well, Arthur. So, I mean, of course, you know, a market doesn't happen overnight. It requires visibility, it requires familiarity, it requires scale. But so do you have any sort of visibility over the size of the market, first of all, and how it has, you know, transitioned over the last couple of years? And then sort of, if you have any views on what does good look like for sustainable CP?
Yeah, absolutely. And I think when we discuss sustainable finance in a fixed income context, I think a lot of people still associate it largely with the term markets. And of course, that's where it began, right, with the ICMA green bond principles. That's where we saw that real exponential growth take off. But, you know, as Scott has just been describing, for a lot of companies, as they think about their debt sourcing, as they think about their capital structure, they clearly have to look across the tenor spectrum. So naturally, we've been getting inquiries in the run-up to the ICMA Sustainable CP principles around, you know, can we export that green technology that we're using in the bond markets through to now the CP and the short-term markets. And we've seen more and more issuers now, and certainly we advocate that as best practice, introducing not a green bond framework, but a green finance framework, you know, allowing for flexibility across output debt instruments. You asked Katie about the size of the market. You know, by our count, there's no you know, fully viable database yet, but by our count, there's around, you know, 45 green and sustainable CP frameworks that are now set up. And what we're seeing, so that's a little bit about the issuer side, about the holistic approach, but what we're seeing as well is you know, steady demand and offtake by the investor base. So I've been speaking to a large money market fund only this morning, who was articulating that, you know, some of their sustainable funds are amongst the best performing, and for many of those, having a green CP tranche is a very attractive anchor holding. So they you know, scoop that up as soon as that comes to market. You know, in terms of what good looks like, I think having added late 2024 the ICMA badge to, you know, certain guidelines has been, you know, hugely helpful in terms of providing some clarity and some authority within the market. And I think also when we set up those guidelines, we were quite pragmatic. Right? We're not requiring issuers to report every month or every quarter. You know, it's an annual report on the CP flows of the year, which you can easily integrate in your bond report as well. Now, reality is that we are in a time now of sustainable finance that is no longer exponentially growing, but it's growing organically, and that's what we foresee for the you know, the green CP market as well. So you'll get a couple new programs every quarter rather than, you know, suddenly a doubling in size.
So I think you're right that sustainable finance has hit a very healthy cruising altitude, but maybe not the heady heights that it had, that its trajectory was leading to. But is there anything you think that could improve, the sort of the pathways for sustainable CP? Like, for instance, it's quite hard to be able to identify sustainable CP programs, right? The infrastructure doesn't really support it. I know that EMI, the European Money Markets Institute, have set up a transparency database to try and capture a lot of the programs. But it's quite hard for people to actually know where to go to find out about sustainable CP. So is there anything in the infrastructure that you think could help? And also, I mean, is there anything in the money market fund segment? Should there be more ESG funds set up? I mean, what's it going to, where is the impetus going to come from?
Yeah, I think to your point, it ties into Scott, what you've been saying as well about transparency, right, in the plumbing and in the infrastructure. And unfortunately, we're now in a case where issuers that when they would like to do green CP, they're advised to have two prospectuses, two IMs, a green one and a non-green one, because otherwise it's hard to distinguish at the tranche level because it's not the right field within Euroclear. So it's creating some inefficiencies because we don't have the fields available.
Do you think that's off-putting then for issuers?
It doesn't help, right, when lots of issuers are trying to streamline documentation and costings.
Yeah. And then just in terms of, we're going to come to innovation, and Benoît, I know you're going to introduce to us your project Pythagore. But before we get to that stage, I'm just wondering also elsewhere in terms of innovation, like what can be done? So, the constant feedback that we have received through the CPC and through the work that we've done is that the infrastructure is still really old. Like, the processes are going back to the 90s, and even getting an ISIN number can take 24 hours, and that just should, like, in 2026, you should not have to wait 24 hours for an ISIN number. So, like, where can innovation help? And then we're not talking about tokenization or, digitalization, but where in the current system, where do you think the cracks are? And I guess this is to pretty much everybody.
Yeah,
I'll
take it first. I think the end-to-end process of issuing CP is still incredibly archaic and legacy. The amount of time it takes, even from booking the transactions all the way through to settlement, to providing the ISIN, etc., really does need to move on. I guess it always, at issuers and within custodians and settlement agents, etc., comes down to prioritization. And has CP been the place that has been given the resource, the prioritization, the cost to really advance the system architecture? And it's the same with some of the technology behind the processes as well. Clearly, businesses have focused on digitizing rates products and a more sort of commoditized product rather than focusing on front-end funding markets. And trying to streamline end-to-end processes there, trying to bring in more sort of digital platforms or trading venues, etc., within these funding markets. So I think it comes down to we just haven't thrown the resource and the prioritization at it.
Which is quite surprising, really, because when you think about it, it's kind of a discrete area of the market where you could do a lot of trialing of things and it wouldn't make too much noise because it's a small, it's quite well contained market, so you think it would be a very good testing ground. And obviously there are some platforms and some solutions which are helping, but do you use platforms? Do you use issuance platforms? Or
no, we're probably guilty of what I've just alluded to, and still having pretty historic processes. Look, it's something we're definitely thinking about and looking at, but there's not really a sort of one-size-fits-all approach out there. Yeah. What we really would like to see is an end-to-end sort of architecture enhancement to issuing CP.
Arthur, do you see any need for innovation, and if so, where?
Yeah, I mean, ultimately, when it comes to growth in evolving asset classes, you want to create that virtuous cycle, right? Indeed, where you can stimulate more supply that boosts liquidity, investor interest, and as investors set up new funds and new strategies, that then feeds back to the issuers. And I was quite struck by, in the ICMA report, yes, there's ECP and there's no ECP, but then there's a number of much smaller domestic markets. And I do wonder when I compare it to the bond market, the Euro bond market, that has become very much a globally recognized source of diversification, a lot of reverse Yankees coming in, reverse issuance from Asia. Could we ever get to a similar stage in the European markets through better consolidation of the smaller domestic CP markets? I think that's partly transparency. I think that's partly regulatory alignment as well, which I think ties in to some of the European Union's priorities in this area.
Yeah. And Benoît, apart from the Project Pythagore, just in terms of innovation in the new CP market, which obviously you're going to speak to at length, what innovations are there in terms of issuance in this sort of more traditional model?
Well, regarding the new CP market, talking about trading platforms, for instance, we have a very dynamic firm in France and very dynamic trading platform that is not only operating on the new CP market, but on various markets across the Euro area. I'm not in a position to comment too much regarding trading platforms, but my personal feelings is that they are bringing some real value added to the markets in terms of data gathering and statistics for their users, and obviously in terms of operational processes. So there are innovative actors, and from my point of view, they really deserve to be part of the discussion.
Yeah, and I think more and more they are, as they're becoming consolidated as well, and there are probably fewer solutions, and they're joining forces, which is always better to have just one solution than a number of fragmented solutions. And just one more thing then, looking at other measures to sort of scale up the market, do you think there's anything in regulation, like the money market fund regulation with the 10% concentration limits, or is there something in the retail participation? Because I think in the US, around 40% of asset under management are in retail money market funds. No, that's not right. Money market funds, retail money market funds account for 40% of assets under management, right? In the UK and Europe, it's closer to 10%. Now, we've heard today, and we hear all the time, about the trillions. I think today I heard it was between 11 and 14, quite a big difference between 11 and 14 trillion, but it's a lot sitting in deposit accounts in Europe and the UK. So should we be stressing more the retail money market funds, allowing money market funds to increase their concentrations?
I'm going to give the lawyer's answer. And
Sorry?
I'm going to give the lawyer's answer, and I think it is fundamentally an institutional investor market, and the way that the documentation is set up with skinny disclosure, in particular, forward-looking disclosures, does make it a bit more difficult, I think, in terms of retail participation.
Any views from the others?
Yeah, I think I tend to agree. I think it's broadly set up for institutions, and I think that's where we would tend to focus our attention from an issuer perspective.
Because we heard earlier on today about the huge impetus in the UK anyway to the plain vanilla listed bond regime, and Lloyds, you've obviously done change your denominations in a bond recently for retail. So I think it's probably a case of watch this space for the retail money market funds. Now, just then coming back to you, Benoît, and Project Pythagore. This is quite a big piece of work that you have been delivering with Euroclear, a joint initiative to tokenize new CP. So we're really interested to hear all about that. And then I would like you to just think about through the lens of the practical applications that tokenization would have more broadly for the new CP market, and if it were adopted elsewhere for the whole CP market, and actually the likelihood of that happening. So I'm just going to hand it over to you to tell us all about Pythagore.
Thanks a lot. Thanks to the ICMA for giving me this opportunity to present this ambitious project today. It's pretty much appreciated. Thanks a lot. So the Pythagore project has been launched by back in October 25 by Banque de France and Euroclear, and more precisely Euroclear France, which is the new CP market CSD. The overall objective of this initiative is to modernize the new CP market through the use of distributed ledger technology, or DLT. Quite importantly, the Pythagore project has been aligned from the beginning with another very ambitious project, which is called the Pontes project. It's a Eurosystem project that aims at providing the market with a wholesale CBDC by the end of Q3. So on the securities leg, Euroclear France is developing a market DLT, and on the cash leg, regarding the settlement, we will be connected to Pontes. So it will be a securities token versus a cash token, or a cross-chain delivery versus payment, to speak like infrastructure experts. So this is the overall design. Now, in terms of motivation, why are we doing this? First of all, we consider that there is a clear momentum regarding tokenization. We had this exploratory work led by the ECB during the year 2025. It was very successful, and that it showed a clear market appetite for this kind of technologies. Now, Pontes will be live by the end of this year, and on top of that, you have all noticed that the ECB is that the collateral framework of the ECB is evolving in order to gradually accept DLT assets as eligible collateral. So there is a broad momentum. Secondly, we consider that CP markets do make a convincing case when it comes to scaling up these kind of technologies, because we are talking about simple securities, high frequency of issuances, and of course short maturities. And zooming on the new CP market, we are dealing with a quite a small amount of players. The market is quite concentrated, both in terms of issuers and investors. So it's quite easy to coordinate or to launch such kind of projects. So Pythagore will have a very strong focus on post-trade processes. This is definitely where we do want to deliver. Our assessment is that the market is, broadly speaking, well functioning, but it still relies on a lot of fragmented processes and constrained operating windows. And this is not specific to the CP market. My understanding is that it's also the case in other European CP markets. Maybe more concretely, we do want to deliver on 3 key topics. The first one is acceleration. We want even faster ISIN code generation. That's very important. ISIN code generation and distribution to all counterparties. We do want shorter execution cycles, and we do want to propose to the market to have extending operated windows. Secondly, we do want to improve operational efficiency by simplifying the whole issuance life cycle, from issuance to settlement and reporting. We want fewer frictions and reduced reconciliation needs between the issuer and the investor. And lastly, we do want to bring some value added in terms of transparency for the entire ecosystem. Just one example regarding issuers. At the moment, it's very difficult for them to get some data regarding holdings. It's virtually impossible for them to have some data regarding this dimension. We do want to change this dimension. Now, in terms of participants to this initiative, the bottom line is quite simple. If you want to transform a market, you need to bring the whole ecosystem along. So, at the moment, within the Pythagore initiative, we have of course, issuers, investors, dealers. We are not forgetting the dealers. We do want to on board the entire ecosystem. And obviously, we also have some key players when it comes to post-trade. So we have the IPAs, the major IPAs, and the major custodian. Just to give you a number, at the moment, the whole participants to Pythagore account for approximately 50% of the market, both in terms of outstanding amounts or holdings. So we are quite happy with this group of pioneers. So we have obviously top issuers and top investors and key post-trade players. Just one additional word regarding the ecosystem. This initiative is rooted in France, as you have understood, but it is fully open to non-domestic players, as the new CP market is. So we do want to attract more issuers, investors, or post-trade players, both from France and abroad. It is very important for us. And last but not least, in terms of timeline, it's quite important. Let me stress that we have taken a stance that is both ambitious or aggressive, but at the same time a stance that remains cautious. Let me explain a bit what I mean by this. We do want to move forward decisively, but at the same time, we do want to be very careful and act in a very progressive way. One of our key priorities is to listen to market participants, preserve within this market what already works, and most importantly, we do want to preserve or to maintain the unity and the liquidity of the market. We don't want the market to become fragmented between one legacy infrastructure and the new one. It is very important for us. So as of today, we are fully focused on the first concrete step of this project, which is preparing the inaugural issuances of tokenized new CP. That means that starting in December 26 at the earliest, shortly after the launch of the Pontes project, we will begin with the first live or real operations. And these operations will take place in 3 waves between December 26 and June 27. And we already have a lot of participants that are ready to take that step. That's important. The year 2027 will be a year where we expect market participants to progressively begin to adapt their internal system, and we expect that they will be progressively move toward more automated or application-to-application processes. And that would gradually open the door to a market migration. But regarding this word, the word of migration, please let me say that we don't want to frighten anybody among the markets. So let me be very clear on the fact that it will not be a forced transition, of course, from the old infrastructure to the new one. The existing legacy infrastructure and the new DLT-based one will coexist as long as needed in order to ensure a smooth and flexible transition. And at the end of the day, we are fully convinced that the pace of migration will be driven by the market itself. So coming back to my previous point, we are listening to the market, and we do want participants to gain confidence regarding the new processes and make the project their own. So once again, no forced transition. It's up to the market to decide the adequate pace. Thanks.
Thank you very much. Very comprehensive. And Arthur, I think you wanted to add something?
Yeah, well, what I think is quite exciting, and thank you for setting out the initiative. When I think about use cases for DLT, for digital debt instruments, what we have started to see various initiatives around is, also importing, decision relevant sustainability information onto the ledger. So we've seen that, for instance, when it comes to issuing debt instruments to support, renewable power generation, that you can get real-time information on that power plant goes into the ledger, then goes to the investors. And I can imagine, in particular for certain types of securitized CP, that could be quite relevant information as you think about the performance of those assets.
Yeah. Very sensible application there. Sorry, Peter, did you want to add?
I was just going to say, I think it sounds fantastic. I think
Yeah.
if you're ever going to grow the tokenized market, I think it does need to be done in a coordinated way.
Yeah.
Because on the tokenized CP programs that we've worked on, actually the barriers to producing the program are quite high. It's quite expensive because you're doing it by yourself currently. So to have a coordinated approach sounds really sensible.
And you mentioned, I mean, we hear a lot about, innovation, digitalization. Obviously, there's the sort of the legacy existing process, etc. And you mentioned the importance of, not fragmenting the whole market. Interoperability, obviously, is a key word as well, and a key to keep that functionality going. But do you think that eventually the tokenization of the new CP market will then migrate elsewhere and we'll have a fully tokenized CP market?
Well, once again, we do think that it's up to the market to decide. I mean, we could have two infrastructure or two ways to issue new CPs that could be complementary. Or maybe at the end of the day, we will end up with a complete shift from one infrastructure to another. In our position, it's way too early to have a very strong view on this. We do want to put in place a new framework to give this option to issuers and investors to issue tokenized new CP. And then we'll see in the coming years what will be the pace of migration and if we will end up with a complete migration or not. But we don't want to preempt too much the future.
Okay, maybe if we're sitting here in 5 or 10 years, we'll be having a different conversation. I suspect we will be about many, many things. So we're coming to the end of our time, but any final words from any of you about just scaling up the market, anything that we need to take away, and so that in a couple of years' time, we're kind of reaching the same heights as the US market? Any final words?
So Katie, you were asking earlier about the retail market, and you got a what Peter said, a lawyer's answer, and perhaps an originator's answer as well. In that, when we talk about the retail market, it is a very broad church, and it also includes, high net worth individuals, certain treasury teams as well, where actually there's a much higher level of sophistication, and where potentially their cash management strategies could benefit from being a little bit more flexible, having more optionality beyond, your sort of plain vanilla bank deposit. So I do think, while I recognize that doesn't stretch the whole, retail market, the sort of, the dentist, etc. But I do think part of that market, from what we're seeing, could benefit from, evolution of their cash management approach, and hence having more instruments to choose from.
Right.
Yeah.
Anybody else have any final words?
I mean, it just comes down to the evolution of the market and making sure that we have better access to data, better transparency, enhance the standardization of the market, streamline processes, and ensure that actually in both, as I said earlier, in both BAU and in the stress, that the market is functioning in the correct manner and at pace.
I mean, I think I would add, as we were discussing before, I think there are some slightly untapped jurisdictions or areas. So we've seen lots of interest in, over the past couple of years, perhaps slightly less for understandable reasons, recently from the Middle East in terms of establishing CP programs. There's quite a vibrant Islamic CD market out there. So short-term paper in the Middle East is something that we're looking at the moment.
Yes, and two final remarks from my side. One key lesson from the past years, I would say, is that there is no silver bullet when it comes to developing such markets, and I see no single measure that would, in isolation, work. So I do think that we do need to play all the keys on the keyboards and to activate all possible options at the same time. So regulatory reforms, transparency, of course, innovation, ESG, and also communication. We appreciate what you are doing at the ICMA in terms of rising the level of awareness when it comes to these markets. So activating all possible options at the same time first, and then I think that we do need a form of cooperation between public actors and private actors. And Pythagore is, in my mind, a good example of this because it's a kind of public-private partnership with, at the same time, a very strong involvement from the beginning of the market.
Brilliant. Well, now, look, literally time has literally just come up. How is that? I mean, you couldn't have planned that any better. Thank you very much to Arthur, Scott, Peter, and to Benoît. Thank you to the audience for listening to us.